Hey, good morning, everybody, and welcome to Coffee with Great Wealth Strategies. This is Eric Kenyon, also known as Regular Joe, and I'm getting a little fruity on you today. I actually don't have coffee. I've got some, I think this is called sparkling iced. Grab some of this at Costco. It's pretty good. It's water, and it's got raspberries in it. Pretty good stuff. Anyways, we're going to talk about China today and some relatively bad news for the U.S. economy that was just reported, and that bad news is that China has now overtaken the U.S. as the world's top trader, and this is within economics. We're not talking about market trading. So reports from the U.S. government this week. Today is February 13th of 2013. So coming out this week from the U.S. government has revealed a significant development in the global economy. China has now surpassed the United States in terms of total trading volume. This has been done for the first time. According to the Bureau of Economic Analysis, which is the BEA, this event occurred in 2012 when the United States engaged in $3.82 trillion worth of trade, while China reported an amount of $3.87 trillion in trade. Various news sources, including Bloomberg News, interpreted the change as long-term side effect of the decline in manufacturing in the United States versus the significant increase across the Pacific. One economist pointed out to the relationship China has cultivated with other emerging and developed nations as the reason how this trend has developed. However, we have talked a little bit with the explosion of the commodities here in the United States with oil and gas. There are some sector manufacturing jobs moving back to the United States just because of the cost of natural gas and the energy boom that we're experiencing, like in the Balkan fields, may deal with this a little bit. But as of right now, manufacturing is being heavily invested in China and not at this point here in the United States, and it's affecting the trade balance. So. For so many countries around the world, China is becoming rapidly the most important bilateral trade partner. Jim O'Neill, a developing economies expert at Goldman Sachs, told a source. At this kind of pace, by the end of the decade, many European countries will be doing more individual trade with China than with bilateral partners in even Europe. The BEA's data showed a wide disparity between the amount of goods shipped by the two countries. The United States experienced a dramatic trade deficit of this is unbelievable, United States trade deficit of $700 billion, whereas China had a surplus of $231 billion during 2012. This numerical divide could grow in the coming years, some experts say, as China continues to invest in its manufacturing base. However, other economists expect economic growth to slow in the Asian nation, which may lead to a rebalancing of the trade differences in the coming years, as I mentioned, especially with the oil and gas reserves that we've just recently found here. So anyways, with the United States' role in the global business environment changing year after year, day after day, month after month, things keep changing. You really need to stay informed with what's going on in the market. So please subscribe to our Facebook page, Great Wealth Strategies. Visit us at greatwealthstrategies.com. And definitely jump onto our YouTube blogs and pass this around, because that's where you're seeing it. And once again, this is Coffee with Great Wealth Strategies. We'll call it Fruit Juice with Great Wealth Strategies today. Eric Kenyon, known as Regular Joe, and thanks for joining us. Take care. Bye-bye.